The stock market shrugged off President Trump's impeachment vote, the one that went against him in the House. As for what happens next, what it means for your money, we bring in Doug Flynn. He is a certified financial planner. He is also the co-founder of Flynn Zito Capital Management. Doug, great to see you this morning. Thanks for coming in. So if you look at the markets up the last 5 out of 6 days, if you look at futures right now, investors don't care, right? Nope. Is that true? Okay.
It is true. I think you've got positive jobs, you've got purchasing power of the economy, you've got passing trade deals, you've got a pause in interest rates. That's a pretty powerful message with the economy, and so I think the market sniffed out that nothing's going to happen here. We've had a good year.
So for the past 17 months, a little bit longer than a year, to your point about trade, all of the volatility has basically, I'm going to say all, let's go with 95%, has been either U.S.-China trade or questions about USMCA.
True.
So you feel like that's going to be removed as we go into the year, some of that uncertainty?
Yes. I mean, since the bull market run of almost 11 years, we've had 14 5% drops and about 10% drops, which is kind of below average. The only volatility is exactly what you've said and centered around. But President Trump has said basically with the China deal that he's pushed off any further conversations till after the election. So he gets a win to talk about for the next year, and it settles down a little bit.
Okay, so we've been talking about this bull market. You mentioned it's 11-year run. This is unprecedented. So there's a lot of people for whom that makes them really nervous because there's this question of, okay, just how long can this go on?
Sure. I don't think it's an age thing. I think it's not the best in terms of percentage. So we have room to go there in terms of making it the best performing bull market. But in reality, I think that the continuance of the conditions make it look like there's no reason why we can't continue with everything that the backdrop that you have with the economy and the job situation and the consumer spending that we have.
You're a certified financial planner. When your clients call and say, listen, I did really well this year. I'm super anxious about 2020. Sure. What do I do? What are you going to tell me?
Yeah, this is the fifth best year since 1959. I think that puts it in perspective. The market sniffed out how good things actually are. So if you've gotten a little out of whack with your allocation in terms of, most investors are 60% equities and 40% fixed income. That's a common average. But if it's drifted up because things have done so well, we're up almost 30% year to date, and you're pushing 70 or 80% equities, you probably want to look at sometime in the next year trimming that back if you haven't already.
So maybe on an amazing day, you just sell a bit.
Yeah, get back to your original allocation, and then that gives you an opportunity if there is a 5 or 10% correction, which we would hope there would be. That gives you an opportunity.
There is going to be more volatility.
There is going to be more volatility, and that gives you an opportunity to add back in. The problem is if you're 70 or 80% equities and you should be 60, when the market drops, you're not going to add. So that gives you the opportunity, if you've taken a little off the table, to put some money back in. All
right, Doug Flynn, I took notes. I'm ready to look after my money in the new year. Thank you, sir.
Great
to see you.
All right, let's take a look at your money right now. Once again, look, Dow up 26, NASDAQ up 1. This could be day number 7 of up arrows for the NASDAQ in a row. S&P also gaining a point this morning.